You can see that in terms of the ownership of equities versus non-equities, which is lower. You can see that in terms of the housing market, which has really never recovered. Home ownership levels are 5 or 6 full percentage points below where they were before the crisis. And also, incomes have not recovered. Yes, incomes are going up. We're all happy to see that. And even the most recent wage data somewhat improved. But Americans lost earnings during that period in a big way, and that they haven't recovered that. And the economy has not recovered to where it would have been without the crisis. So there were not just severe effects, but there were permanent effects.
Human nature played a big role in what we saw, obviously, back then. We always hear that the next time that history, something happens, it might rhyme, it won't repeat itself again. Do you think we've learned anything? I mean, back then we wanted home ownership. We definitely turned up the heat to try to get us up to 70%, 75% home ownership, which put it in a position where people that shouldn't have owned homes, they didn't have they didn't have credit, they didn't have money down. And at the same time, you had Wall Street banks packaging these things and somebody insuring them, making you think they were AAA. So it was a weird...
Well, I think, Joe, we have learned. After all, the banking system is much stronger today, both in terms of permanent capital, leverage levels, liquidity levels. But and also the regulatory framework is much stronger. Although I don't think some of the recent rollbacks are sensible. But in the very long run, financial crises have been occurring more frequently if you look back over the past 30, 40 years. Each one tends to come from a new place. You think you're going to fight the last war like one always thinks, and the crisis comes from a completely different place, and the next one likely will. So will there be another financial crisis? The answer is certainly yes. And to the extent that way deep down they're caused by various types of animal spirits, of course, those haven't in the most fundamental way changed. But here, 10 years after, you don't see the types of abuses, you don't see the types of extreme behavior that caused that crisis. I mean, if you think about it, no doc loans, AAA ratings on crazy securities and so forth. None of that extreme behavior has returned.
Do you fault the private sector back then, or do you ascribe some blame to the government sector and Fannie and Freddie and everything else that went on back then?
Well, I think it's both, but you can't. You have to start with the private sector because
I'm not sure.
Well, when you think about things like securities firms leveraged at 25 to 35 times,
right.
You look back on that and you say, how could that have happened?
I mean, government created the opportunity, but private sector is who took advantage of this.
But both, because
normally if a company does that they engage in activity like that, they're quickly put out of business and they're not around anymore. That didn't happen though, and that also happened from
which is regulated.
Well, I think both. I mean, the regulatory framework was outdated, and what was required of securities firms, what was required of banks, what was required of the shadow banking system and so forth was, still effectively rooted in the 30s.
So the regulatory framework is always behind what the private sector is doing because private sector's job is to try and find places that they can exploit.
That's right. And also, as I said a minute ago, the next crisis comes from a new place. If you think back about the crises we've had, the Asian financial crisis, the Russian debt crisis, Latin American debt crisis, and so forth.
I have heard people posit that the next financial crisis is going to come from Asia again, that if you're looking at China, South Korea, Japan, all the influence that's built up there.
Well, I don't see any evidence right now that there's a crisis brewing, but
how about the Fed's balance sheet and when interest rates go up?
Well, the point I was about to make was the concern that I personally have, partly because it's an opaque situation, is China. Now, at one level, China is tightly controlled in a way that, for example, our system, of course, in the run-up to 2008 was not. So I don't really think there's a giant crisis brewing in China, but if you had to pick a spot where you'd always want to keep your eye on it, that would be. I agree with Joe. The roll-off or the rundown of the Fed balance sheet is going to pose problems for markets, and we've talked about that for years. But we're in one of those.
Economy might help.
We're in those. We're in one of those kind of no worry moments right now.
Yeah.
As Tim Geithner and Hank Paulson and Ben Bernanke said in the op-ed they wrote this past weekend, the greatest risk is forgetting what caused the crisis and forgetting the alertness you have to have. And I agree with what Warren Buffett said. those guys and all the people who worked with them were heroic. I mean, if you think that what the Federal Reserve did, $13 trillion of credit assistance.
Right.
It's an incomprehensible number. And without that, there would have been, as Buffett was talking about, an awesome catastrophe. And so we were lucky that we had leadership like that. We were lucky that we had an unfettered Federal Reserve, which could do that, which no other nation on earth had. And we were lucky that the country came together, even though there obviously were bumps along the way, like over the TARP.